Natural gas prices continue their grind to the upside following the Russian invasion of Ukraine, but is the majority of the buying pressure done for now? My name is Connor, the Senior Market Analyst at the global brokerage firm Zenfinex, and I provide video analysis on various different trending markets on most trading days. Today's video will cover an up-to-date forecast on the natural gas market, which will follow the structure of a fundamental and technical analysis. This will give you some ideas of where the natural gas price is headed over the next few weeks. Enjoy. Okay, so during the last natural gas forecast video, tensions in Russia and Ukraine were really bubbling on the surface, and as you're probably fully aware now, Ukraine is under a full-scale invasion and shocking scenes continue to come out of the country every day. As a result, a whole host of sanctions have been placed on Russia, with natural gas and oil really leading the way in that respect. The EU especially depend massively on Russian exports of oil and gas, or they did. For example, you've got Nord Stream 2, a 745-mile pipeline stretching from western Russia's border with Estonia and northeastern Germany as well. Opening this was expected to actually double Germany's Russian natural gas imports. However, obviously Germany have now halted this due to what's been going on in Ukraine. The most important thing for this video is I've noticed how there's been this real shift for independence across the EU and the US, with both parties believing they can cope fine without Russian exports of gas. Toby Rice, who runs the largest natural gas producer in the US, seemed really confident that replacing Russian gas would not be as hard as you think. He told the BBC that the US has the potential to quadruple its gas output by 2030, and if this was the case, it adds to really the bear market for natural gas prices. Now, looking at the weather and consumption, the weather in the US is expected to be warmer than normal throughout most of the US for the next 2 weeks. Also, US consumption was down week over week. Obviously, we're going into the warmer months in the EU as well, in Europe as well. And I think really with these factors combining, natural gas prices are becoming increasingly bearish, in my opinion, with warmer temperatures on the way and the switch to independence in terms of gas production from the West. I would be a seller at the current prices, but let's try and find that selling opportunity on the chart now. When I completed my YouTube short video, and I actually noticed how really we were stuck in this range. We've been in that for the last maybe 5 or 6 days. We've been stuck in this range between 3.8 and the 5.3 level up there, and I do favour a move towards this 3.8 level, which is going to be one of the take profit levels that I have for natural gas. But let's look at things in a little bit more detail. We look at the RSI indicator, which isn't showing us too much. It's showing us a market which is looking for a move on either side really, and is a market which is fairly balanced in terms of its price action. So we can get rid of the RSI, but let's add in our moving average indicators just to see what prices are looking at the moment. Now, well, what we can actually see is we had this cross, and if you looked at my Nasdaq forecast yesterday, I spoke about this being the death cross, where the smaller moving average, the 50-day moving average, crosses over and below the 100 and the 200-day moving average. That's a really bearish sign, and as you can see, we're getting into a really interesting position for natural gas, where the moving averages are starting to move towards each other. What happens here is really crucial, because if we get a situation where we have the 50-day moving average touching these higher moving averages, but then starts to tilt back down and look a bit lower, then we can look towards this 3.5 level as a potential take profit level, which is one I'm going to mark now. Alternatively, of course, we could see a situation where this moving average actually does go up and actually ends up crossing, and we actually look more bullish for natural gas prices in terms of technical analysis. But let's wait and see what happens here, but make sure you've got those two scenarios in your mind when that time does come. If we're looking at more price action, let's get rid of these, we don't want to see them anymore. If we're looking at some more price action, what you can see what actually happened is we had this huge breakdown to the downside at the beginning of December, and what it did is it left behind we actually had this gap in the market that we had here. You can see this gap in the market, and as you can see now, twice we've gone up, and we've can see the gap where we opened up here. We closed up here, but then we opened up down here. That gap, we saw the market actually run up and test this gap. It failed. It respected this gap, and it broke down. But then we also nearly run into this order block, and since then we've kind of not really been doing much since then. So maybe we're going to get a situation where we're going to get one more run up into this gap, and then we can look for sells down. Love to sell natural gas around this 5 level, looking towards the 3.8. For me, if I was going to short it around this 5 level, I'd have my stop losses just sitting above this high here, and I'd be targeting first of all, or if you wanted to be extra cautious, you could have it above this gap, because I think if prices do break above 5.4, then we are obviously more bullish, and we're going to be looking more to break out above towards that 6.7 level. But I can't see that happening at the moment in terms of the fundamental side. So if we do get a break and into this gap area, then we can look to trade the market down into this 3.8 level. That's around a 3.2 risk reward ratio trade. I'll be happy to place a sell limit there, maybe even a bit more, 3.47. Then we could have a second target down towards this 3.5 level. That's a 4.5 risk reward trade. It would mean that the market then, if we do get a break fully below this level, then this market is bearish, and we'll then be looking towards some of these internal liquidities that we can see down here. But that's my main play for natural gas. Fundamentally, we're looking increasingly bearish, although of course Russia do have a massive influence in terms of the global market for natural gas and oil as well. But if the EU and the US can come up with something that means they're more independent, and of course the warmer winter months come in, I can see prices moving towards that 3.8 and that 3.5 level. So if you did enjoy this video, make sure you've given it a thumbs up. Subscribe to our channel as well. It does help boost our channel. Let me know where you think natural gas is going. Are you a buyer or are you a seller at these prices? We're stuck in this range at the moment, and I think we're going to break out either side very soon. Other than that, make sure you're managing your trades carefully. Have a great trading day, and I'll catch you all for the next forecast video. Thank you.